Welcome everybody. Every once in a while I'll stop and do a little extended discussion about myself, who I am, where I'm from, for those of you who are newer. But I'm kind of I think booked up tonight, so I'm just going to get right into it. And those of you that don't know me will have to take a chance on listening for a few minutes and see if you like it or not. I do these events about every other week. They're on a calendar at DTS. If you go to the DTS website, well, let me give you this here. If you go to the DTS, there's the free stuff page, but I just happen to have that loaded in my clipboard there. But if you go there, you see off to the left, there's a DTS calendar, and you can see all of the free events coming up. I typically do one of these every 2 to 3 weeks, kind of depending. And there's a variety of different topics, and if you miss them, the free stuff page there, they are all recorded since the beginning of time. You may have to go back to the archive page to see some of them, but they're all there, and that's a great place to be. I'll mention that again later on tonight, but let's kind of get into tonight a little bit. I'm going to have 3 big topics from tonight. There's a huge list, but I'm probably going to narrow it down to 3 topics that I really want to spend the time discussing. So popular things that don't make you money. What's the point of talking about tonight? Well, here's the little blurb you saw on your invite. I know most people probably don't read that. So a couple of important things there. The top part of that, this is part of what I think is involved in teaching properly, and it's called removing the incorrect information from your brain. And the reason that I feel this is so important is because, number one, it's recognized as being important to any educational process. But having done this for quite a while and working with people for quite a long time, I know one of the most frustrating things to me as an instructor, getting through to somebody, is when they continue to return to old habits, if you want to call it that, but they continue to reinforce things that they learned that simply make no sense, that have simply been proven to not work, but yet they're habitual. They keep going back to them. So to really learn what to do in the marketplace, whether you're short-term trading or long-term trading, which you might call investing, I call it all trading, you have to, first of all, get rid of some of these really bad things. Now, there are, again, several different ways to do things properly. There is some variety in success, but there are things that are wrong. And tonight is going to be kind of a laundry list of some of these, but I'm going to focus on some I've never focused on. So this is not going to be in any way a reproduction of some other evenings, even though I've done a lot of these events. There should be basically new information for the most part. I may, the list will touch on some repetitive things, but the 3 focus areas for me are things that I've not really talked about very much. Unfortunately, many people feel that getting advice from people on TV is good because they're smart people. Nothing can be further from the truth. It's nothing to do with their smarts. It has to do with their motives. And the holy grail, in summary, is one of the worst sins in trading. We'll talk about that a little bit and what that means exactly. I don't want to stay here long because I don't want you to think we're going to necessarily go through all of this. Some of this is discussed in other events or whatever. This is just kind of a laundry list of popular things that simply do not make you money. What I do want to focus on is that when I come around to teaching these, I try and do it in a way where there just really is no argument against what I'm saying. In other words, we're going to see in a minute, we're not going to talk about the first 2 tonight at all because it's covered in other events, but when I talk about news and fundamentals, and when I say other events, I mean even free events that all you can attend. The Introduction to Mastering Technical Analysis classes where I discuss news and fundamentals. We just had that last Friday. If you missed it, it'll be every 6 weeks. But I don't just feel, I know for a fact that when I discuss these 2 things, there is no counter argument. You cannot argue back with me. It's not that I'm smart or good. It's just that I present this in a way that I hope you understand it. And some of these topics, while I know factually what the truth is, sometimes I don't feel equipped to discuss it with somebody because I can't prove it conclusively because I don't have the stuff there in front of me. But for the ones I want to talk today, I've decided to take the time and, in a sense, at least in my mind, conclusively prove to you why some of these are just not good things. And I want to make one other quick little comment here before we get too far into it. A quick word about tonight. The topics tonight are aimed at helping the vast majority of experienced, newer, or brand new traders, investors. Again, this is not just for, thinking about trading people or brand new people. All of my seminar program members have to understand, know, and attend these. This is all good information. And tonight, I think even the most experienced traders may benefit some from what I have to say here, or at least open your eyes to some things. If I told you it was dangerous to cross a busy street blindfolded, you could prove me wrong and do it. But that doesn't mean the advice was bad, nor does it mean that you were smart to try. Trading is about odds. The faster you learn them, the better. I put this slide in here because I think that applies very much to some of the topics tonight. When we're talking about charts, it's kind of a two-way thing. When you attend some presentations, which I'm sure if you're here, I'm sure many of you attend several of them, and especially if you're attending one that is showing some magical indicator type of thing, you'll get all enthused because you'll see chart after chart where this indicator just works beautifully. But it's in the category of a broken clock working twice. For every chart that you find where it works, I can find you 10 where it doesn't work. The question is not, can you find a chart to prove or disprove something? The question is, over a long period of time, using what you're trying to use, does it get the odds in your favor? I've been talking for 6 straight minutes. Does that make sense, everyone, what I'm saying here? Because it's kind of an important thing for tonight. And not so much, I'm not concerned about somebody coming back to argue with me. That's fine. I encourage you to do that. My thing is when you walk away from here, that you don't just go say, well, gee, Paul said this doesn't work, and look, it worked. Well, yeah, like I said, you can cross the street blindfolded and make it across alive. It doesn't mean that it was bad advice to not do it. So I want you to keep that in mind as we go through this. And if you're a little stubborn on a couple of these, I want you to open your mind to, what I'm saying. And also remember, I have absolutely no motive to put any of this stuff down. There's no patent against me using anything on that list. There's no law against me using it. I teach my students everything that I possibly can to get them making money as soon as possible using the right things. And anything I think is valuable, I include in that list. So if I'm saying I don't use that, it's not because I don't even know what the motive would be. I mean, there is no motive for me to say don't use that. If it helped us at all, I'd say use it. And some of these are, when I get to them, you'll understand what I'm saying. Some of these are things you could take a look at. To help understand some of what I'm talking tonight, let's talk about a concept called self-fulfilling prophecy, because it's very important in the marketplace. We need to understand so there's no confusion. Self-fulfilling prophecy, here's the actual definition: the process through which an originally false expectation leads to its own confirmation. I love this term. It can help you. What can help you? Self-fulfilling prophecy can help you in 2 different ways. When self-fulfilling prophecy lines up with valid concepts, it can be the spark to ignite a valid pattern. You like my spark there? When the self-fulfilling prophecy does not line up with the valid concepts, it can be played against if that failure would ignite a valid pattern. In other words, when a self-fulfilling prophecy exists in the middle of nowhere, like there's no credible reason to think the chart's going higher other than the self-fulfilling prophecy, the goal is to not try to take the self-fulfilling prophecy higher. It is to wait for it to fail. And then the idiots doing the self-fulfilling prophecy will have to exit the trade, and it will help the original direction. Okay? Don't get offended when I say idiots. I say that all the time, and I freely admit that sometimes I'm the idiot. I was an idiot a couple times today. Rarely are we perfect. But the goal is to not be an idiot every single trade you do. So let's take a look with a chart showing exactly what I mean by self-fulfilling prophecy. We all like charts, don't we? Self-fulfilling prophecy. Here's a self-fulfilling prophecy comment. The 200 moving average is support, especially on the daily chart. Is that true? What do we think? I'm going to start asking you guys for a lot of opinion. In the last half of this, I'm going to ask you for a lot of commentary to get you thinking. Is the 200 moving average support? It's commonly said. I think it's even written in some books. I think there's some books that actually say, or at least some articles for sure, that say, hey, find support by trading off the 200 period moving average. It is certainly not actual support. When you listen to me talk a little bit or think about what really happens in the marketplace, it's absolutely silly to think that it's actual support. Meaning, what makes the marketplace move? Well, there's a couple of things. When things are slow and there's nothing going on, there's what I call traders playing with themselves. There's traders just playing with themselves. What does that mean? Well, it means that there's no big money coming in to drive things around. Things are just bopping up and down, top to bottom. A few people buy, a few people sell. And if there's absolutely nothing happening, and if very, very low volume is driving the price pattern, anything could make something move a little bit. It's called subjective. It's a subjective thing. But when you think about what makes a chart move, this is a chart of PFE we're going to look at here. PFE today traded, let's see, 45 million shares. 45 million shares. Do any of you out there trade a million shares of one stock at a time? I doubt it. I doubt it very much. 45 million shares is a lot of shares. Who's trading those? Well, big players are trading those. Do you think that a big player, when they have to sell, I don't know, a million shares of PFE today, 2 million shares from a fund that they have, do you think that they're going to say, wait a minute, I can't sell this because it's on the 200? It's going to go, you think that's what they say? They're the ones making the charts. They're making it based on supply and demand. So this subjective concepts, like moving averages, are not real concepts. So when you have a chart pattern that says it's going lower, it may stall there for a very short period of time while everybody looks around and says what's going on. But if the chart says it's going lower, there's the 200. There's the 200. Price is hitting the 200. We're going to bounce, right? Well, no, it's going to do whatever it's going to do. As a matter of fact, the great trade here is to acknowledge when it doesn't work. And you see that big bar that formed? That was like when that was at the low, that was the biggest bar in 2 months. The trade is to play the direction of the chart against the self-fulfilling prophecy when it's just the dum-dums trading that. Does that make sense to everyone? Do you fully agree and believe that? I'm going to show you another chart because I said there's two purposes to self-fulfilling prophecy. You can't reasonably believe that the market revolves around hitting fictitious lines on a chart and actually having serious moves, right? You can't seriously believe that. When you think about it, when you go to bed at night, when you're thinking about what you're doing, you can't really believe that that's the case, right? Nobody can. You just can't. Now, why is it that you think that it kind of works sometimes? Well, here's the reason why. Let's take another chart. When you have lots of self-fulfilling prophecies, SSPs, I abbreviated, coming together in real areas of support. Now, what makes real support? I just called a moving average all by itself, floating out there in outer space. I call that subjective. What makes real support, somebody? What makes real support? There's only one thing that makes real support. And even real support is not guaranteed support. It is a high probability area of buying, or for resistance, a high probability area of selling. Yet it is either past evidence on a chart of where buyers were interested, a type of memory effect, or past areas on a chart where I know people have to buy. That's a little complicated to get into for right now. It's not my goal right now. But for every movement on a chart, you have to remember, there are people that want to buy that move. There's people that have to buy that move. They have to buy it. There's no choice. There's people that want to sell, and there's people that have to sell. That whole combination is involved all the time. And the idea of reading a chart is to see where the balance lies. This is a real support area. This is Intel very recently. This is a real support area. Not because it's a gap fill per se. Gap fills are not support either. Gap fills frequently can be support, but a gap fill just because it's a gap fill is not support. This one is. So this is a real area of support. And look what we have coming together. We have self-fulfilling prophecy number one, the 200 period moving average. We have self-fulfilling prophecy number two, the 20 period moving average. And if that happened to also line up with a Gann line or a Fibonacci or an inverse hyperbola Hibachi line or whatever you want to put on the chart, the more people that are saying, hey, maybe that's the right area, the better, because that can become the spark that lights the real move. Because in other words, this is support period, whether the 200's there or not. So if I can get another 10% of the people to jump on board, or if those people who start buying it ignite the bandwagon that's going to get it higher, then that's a good use of self-fulfilling prophecy. Does that make sense? So now we have the 200, boom, 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 and we have a price pattern that acknowledges that that should be an area to move higher from. Okay? Support is not support until it holds it. Well, that's true, LG. That's very true. And that's why, if you heard me a second ago, I said that there is no area of support that is guaranteed support. I said that they're all probability areas of buying, right? That's all that we talk about, because you're right, until we see several bars later. And of course, once you know that was support, how do I finish that statement? Once I like what LG just said, it's not support until it holds the support. And by the time I can prove that it holds the support, it's already what? It's already too late. It's already too late. Yeah. I can't, after the rest of the world of dum-dums gets in, I can't get in and start saying, well, everyone else bought this. That's why you have to understand a chart well enough to know to say that is the area. Just give me a little clue, give me a little hint, and I'm in. So that's self-fulfilling prophecy, okay? The list is long. I don't want to read it right now because I don't want to give away anything I'm going to talk about, but let's get a couple things out of the way. News and fundamentals, I'm not going to discuss at all, so don't worry about it. We talk about it in other classes. Top gainers and losers. I'm just going to give a verbal comment to it. It's not a thing. There's nothing wrong with looking at top gainers and losers to get a watch list together. But these are not trade ideas. You don't, I mean, rarely do you buy something, coming off the high of the day list. Why? Well, because it's at the high of the day. Sometimes these things go higher, sometimes you get in and you get whacked. But it can be a good list to create a watch list to look for later. There's a lot of things we can do. A lot of things, almost anything could be something you put on a watch list. So it's okay to look at that, but people get hung up, and I've seen trading platforms where the only thing up there is the high of the day list, low of the day list, and people are trying to trade them as they take out the prior day's high or whatever, and these are usually not good entries. They're only good entries when you have a miracle run. Moving average, crossovers, and any other technical indicator, again, that's discussed on another evening. And I don't really want to get into that tonight because I have a couple of big topics I'd rather get into a little bit more tonight. But a technical indicator is something that takes past price action and creates a mathematical computation, extends it into the future. And they're simply not necessary. I'll talk about this more in a little bit, so I don't want to get too much into it, but it's perfectly fine to use a technical indicator as some kind of guide to you if it helps you, or to negate a trade. I personally have a couple moving averages on every chart, and they are technical indicators. However, you never ever enter a trade because moving averages cross or because a technical indicator gives you some kind of buy signal. Moving average cross, I had a gentleman. Did I mention this the other day? No, I think it was in class. But I had a gentleman the other day call me, and if you're in the room, I mean, it's fine. I'm not going to say anything bad. Just, don't volunteer yourself. But he called on the phone to DTS, which I don't get a lot of calls, really. Most people email. And it was right after the last presentation I did, and he wanted to know if, this is DTS, blah, blah, blah. And he wanted to find out about signing up for classes because he was impressed at the last presentation I did. And I said, oh, great. I started to talk to him. And then he started talking about, yeah, I was really amazed how every time those moving averages crossed, the price went higher. And I said, oh, I'm sorry, I hate to tell you, I think you have the wrong place. I said, I make fun of that. I don't do that ever. And then he repeated the title of the presentation and my name and blah, blah, blah. I said, well, yeah, that's me. That was the presentation. But what was funny to me that I got out of it was, even though I was telling you why I was doing those trades and all the technical reasons, all he saw was that coincidentally on a couple of the trades, apparently, I don't even know. I would never know if a moving average crossed when I bought it. But apparently that's what he saw. Isn't that funny? I mean, were some of you here 2 weeks ago when I did that one? Were some of you here for that? We looked at a lot of charts, looked at some trades. Never ever did I even mention that comment. Never did I say that, and yet that's all he got out of it. And it just kind of amazes me how people are always looking for that shortcut thing, just that quick little, I know you're talking about all these different things, but you know what I saw? I saw those moving averages cross. That's all I need to do. It's not going to work. Let's continue on here because this is still, I'm not even into the main topics I really wanted to do. The next one's coming up here. Again, this is kind of a laundry list, and if I talked in depth about every one of these, we'd be here for 4 or 5 hours, literally. So another one on this list is correlation versus causation. This is just such a big thing. We are going to talk about this indirectly when I talk about the next topic, which is financial shows and some other things. It's just, it goes along with what I said when you have somebody showing you, oh, gee, a moving average crossover is how you make money in the market or any technical indicator. And they go and they'll find a dozen charts where the XYZ line turned green and the trade worked. But it's not causation, it's correlation. You could find here this chart went higher because these moving averages crossed, because this technical indicator turned green, because the Bears beat the Cowboys yesterday in the football game, because it's raining out today. All kinds of things happen by correlation, but it doesn't mean it was the reason it happened, and it's a big mistake traders make. Again, that's all I can go into it now. The holy grail is, I've referred to it a few times, is people always looking for some magical thing that they think is going to work. And come on, everybody listening to me, could we all just please agree on something? The first part you don't have to agree to. I'm going to tell you that learning trading is not very hard, okay? However, can we all agree that there is no magic line, software program, or anything else that's just going to make you money out of the box? Can we agree to that? Here's my proof. Number one, I would use it. Number two, I would tell you to use it in conjunction with number three. Number three, I haven't told this story in a while, but a while back, I was giving a talk similar to this, just saying that there is no magical technical indicator, there is no black box thing that works. And a guy chatted me and said, hey, can I call you later? I loved your presentation, I want to tell you something. He calls me. It turns out that he was the guy actually hired by Goldman Sachs some years ago to hire to lead the black box department, to create software that would trade automatically. And after 3 years, they gave up on the program. Now they didn't, you can still probably hear something about it, but they effectively gave up because they couldn't do it. They still do some programs, and they do this and that, but effectively it just doesn't work. You can't do it, at least not at the current time. So it just can't be done. And if you think it can, show it to me. I'm open. Show it to me. I'll start using it. Okay? Okay, let's get into the next one here, because so far it's been a lot of checklist talk, blah, blah, blah. I want to talk about financial shows a little bit, because I am just outrageously offended these days. I just am. And I got even more offended when I went and I Googled, and actually did this earlier today, I Googled list of all the financial shows. Because I wanted to put like 20 of them out here. I put 4 of the common ones: Fast Money, CNBC, CNN Money, Fox Business. There's some financial shows where you listen to and they tell you how you're going to learn to make money. And first of all, I was offended because when I Googled that, I'm sorry, I had a couple of questions here. Well, yeah, market making and trading is 2 different things. And they do mix in trading with their market making. Yes, they do. But they have the advantage of knowing kind of where things are going. If you take a market maker, and I know because I've trained 2 market makers, if you take a market maker and put him in the market with his personal account, he's kind of lost, and he actually is. Both the ones I trained would tell you that. They were terrible traders. Now, if you're making a market and you happen to see that you have 50 sell orders and 50 buy orders, and you execute all the sell orders first, guess what? You got a clue that things are going to go up for the next few minutes. So that's the way they can do it. But again, you and I can't do that. We don't get the order flow. We're not taking orders from customers. Okay? It's a great question. And I encourage those things because, again, I want to try and remove these shortcuts, from your head, because they're not things you're going to be able to rely on. So financial shows. So when I Googled financial shows, just to put the list on here, I just want to list all the shows because I don't know off the top of my head what they are. And you know what I got? I got real honest to God sites saying what are the best shows. Like they went and analyzed all the different shows and saying which are the best ones. And it's just ridiculous. So I want to quickly run through this. And first of all, I want to say that as a human being, I listen to news. Don't get me wrong. I listen to news. I listen to political stuff. I listen to financial stuff. I want to know what's going on. I want to know, all these things because I'm a human being on planet Earth. As a trader, all of that news is just cloudy, murky stuff that would confuse me and hurt my trading. You may not believe that, but it is really and truly true. Let's talk about what financial shows are for. Number one, participation, please. What do all financial shows have in common? What do they all have in common? There's one thing they all have in common. What is that? Yeah, well, they're all businesses, right? They're all businesses, and they are for-profit businesses. They are running a business, an entity, and they are there to make money. How do they make money? How do they make money? And by the way, I'm just going to walk you through a common sense thing. If there's any one line that I say that you think is inappropriate, incorrect, and again, I have nothing against financial shows. I listen to them myself. I really do, all the time. As a matter of fact, between my wife and I, we have some kind of news thing on half the time during the day. But they will not help you in trading at all. Right. What do? They make money by selling advertising, right? How do they sell advertising? By their viewership. Their whole goal in life is to have as many people listening at any moment that they can. Correct, everybody? I don't think anybody can argue with that. That's just an absolute fact, like the sun's going to rise tomorrow, correct? If that is their goal, let me ask you question number one. Are viewers going to turn into that show if they hear things they don't want to hear? No, they're not. This is the stupid thing about the whole industry and about us and everything else. In other words, everybody is bullish. Everybody has IRAs. Everybody has money in the market. They want things to go up. When I say everybody, I mean virtually everybody. All the average people, right? Has anybody ever gone down to their barber and while their hairdresser, the nail salon, while you're getting things done, the two employees are talking about their portfolio of shorted stocks? Has anybody ever heard somebody talking about their short portfolio? Anyone? Anyone? Anyone ever heard discussion of my portfolio of shorts? No, of course not. It's always the longs, right? So does anybody want to turn into TV and hear somebody say, oh, the market's toast, that's it, we're done, market's done? What else would the news show say? That's just like slitting their throat. There's nothing they could possibly say after that that's going to keep viewers. As a matter of fact, fast money. Jim Cramer knows this. What's his famous line? I haven't heard Jim Cramer's voice in probably 6 years, to be honest with you. Is he even on TV still? Yeah, I've seen his commercials. You know what his famous line is? What's his famous line? Go ahead, somebody. What's Jim Cramer's famous? Not everywhere. There's always a bull market somewhere, right? There's a bull market somewhere, right? Yeah. So if we search through the desert for years and years and we turn over some rock, we can finally find one worm. Why not use the sand? Why not use what's in front of you? If everything is falling, why are we searching for the one thing that's out there that may be railing? Why? Because he's on TV and nobody wants to hear about their portfolio falling, correct? So, and if you listen, folks, if you listen very carefully, they are huge cheerleaders for the market, right? There was a morning just last week, it was a weird day because the markets are opening down a lot, like it was a very bearish open. The Dow was up like 50 points. Guess what they said? All they said, Dow's up 50 points, Dow's up 50 points, Dow's up 50. That's all they said. Didn't want to say the S&P was down, not at all. So, the point I'm getting to, of course, is you listen for your entertainment, great. Listen because you're a human being and you want to know if Tesla's making a new car and whatever else. But please, for God's sakes, please don't think that you're going to understand the market, the economy, anything else by listening to the news. Now, here's the other thing is that why do they report 100 economics every week, 100 economic numbers every week? Why do they do that? Does anybody really think that a 0.01% change from last week's blah, blah, blah number is going to move anything? Does anybody really think that? Does anybody think any number reported week to week is going to move anything? I mean, of course, there is some obscure relationship between countries, economies and stuff, but it's so obscure and way out there, you can never correlate it. But why do they have to focus on the economy? Why? Because if you, the economy opens the can of worms to hours and hours and hours of discussion, right? When you turn in the morning, what do you hear people saying? Well, at 8:30 we have the GDP numbers coming out, and at 9:30 blah 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 we have this number coming out, and we're expecting this much, and it's all hyped up like you're at a horse race. Who cares? Who cares? Nobody cares, right? But they have to do that because what would they talk about? If they decided, if they all admitted we're in a bear market, things are going to fall for 9 months, what would they say? What could they say? They can't tell people to sell anything. They would never do that. I've heard some of the dumbest comments come out of financial people that are paid to do this. One comment from someone you would know, and I don't want to name names, it's not the point, but you would know this person. They said after the market was up for like 7 years, they said, can we finally trust the market? Can you believe that question? Can we finally trust the market? This is the person that got very mad when the market crashed in 2008 because they got burned. Yeah. Can we trust the market now? What kind of a comment is that to teach people? When do you trust the market, everybody? When can you trust the market? Want to give me a time frame? Never, never. It's not supposed to be trusted. The market will crash extremely hard, and after it rallies, it'll crash again. That's what markets do. They rally and they crash, they rally and they crash. You get people that say you can't time the market because they don't know how, so they come up with these stupid, stupid comments. Did you ever hear the comment that the market has never been down over any 41-year period? Oh, thanks. Great. Okay. So if you put all your money in the market now, LG, you may get it back in 41 years. Does that make you happy? Is that a good investment? Let's skip on to this next one. They have fund managers on there. I want you to be very keenly aware of this also. When a fund manager comes on, and by the way, what they do, of course, is what's got me really frustrated is they all have a new theme. Have you seen this theme that they all have? It's they have the individual people who are talking to you from a financial perspective come on during a commercial or something and say, I am here to help you make money. Well, you're welcome to leave. I mean, I do 2 presentations a month for 3.5 years. They're all listed. People love them. There's a lot of topic to talk about. I don't know if it's your first day here, but no, this is what it's going to be tonight until we get to the very end. And you're not going to like the end if that's your attitude, because the end is going to refer you to a lot of other stuff. But this is the point tonight, and I explained it is to get the wrong things out of your head. Because as I train people, I continue to get people coming back and saying I couldn't do this, I couldn't do that, because it was good news, it was bad news. So that's what we're doing tonight. You're welcome to listen, you're welcome to leave. So when a fund manager comes on to one of these shows, when several comes in, when several fund managers come on and they parade them on one after another, and they say the market is going higher, that's what the fund manager says. And of course that's all that these people can do on the financial shows, because they never give you any advice. They never say, okay, the market's topping out here, time to get out. They never say something like that. They bring on instead a variety of people, right? A whole mess of people. And they all give opposing opinions, right? But when you have a fund manager come on that says the market is bullish, what does that really mean? When he says market's very bullish, we're going higher, what does that mean specifically? And I'm not making this up. It's just the truth. It's just a simple fact of it. Follow the money. What does it mean when a big manager says market's right? It means that he has money under asset. It means he has a lot of it, and that if he is telling you the market's going up, it's because he wants the market to go up so he can sell. And conversely, if a fund manager comes on and says, oh, I think we're in for a big pullback here, he actually wants to get more, and he wants it to pull back to buy more. So what you're hearing is not serving a purpose for you, it's serving a purpose for them. Of course it is. Nobody's there on the shows to help you. Another extreme example, a person who's paid a lot of money, I heard explain why GME had the rally to $500. GME to 500. And any one of you here, tell me why GME rallied to $500. Tell me why it rallied. If you don't know, that's fine. GME rallied. GME is a $20 stock for some piece of crap company that rallied to $500. Why did it rally to $500? There's one and only one reason, and it is the essence about why charts go up and down, period. It's all about supply and demand, right? It was a short squeeze. Some people got together, They started to squeeze, and boom, it was a short squeeze, right? Does anybody think that? Does anybody think that GME was worth $500 per share, whatever that means? Well, it was for a couple days because that's what people are paying for it. But a person came on and explained on one of these shows that what GME was all about was that GME was very undervalued, and the only reason it was undervalued was because these big, mean funds were selling it short, and that these other people realized the value of GME and they traded it up to its real value of $500. A person on TV said this. Not a guest, a regular host on a show said that, right? A short squeeze is, Carmen, well, it's really no different than a long squeeze. If a lot of people are short the stock and it starts going up, well, the people buying it are making it go higher, and the people who are short, in order to exit a short position, Carmen, you know, you have to buy it, right? So you have people buying to exit their position, and you have people buying to buy, and it makes an accelerated run. And if you catch a big fund that is millions of shares short, and they have to start covering it, they don't have time to goof around. They got it covered, and the thing flies higher. It's really no different than a long squeeze. If people are long, the prices start dropping, you get margin calls, but for some reason, we get all excited when it goes the other way. So, point is, many of them have a theme helping you make money. That's the big theme lately. How does that happen? It doesn't. So this is one of the ones I've never talked about in detail, and I just want to go into it for you. Let's continue on. Couple of quick comments. Just again, popular things people say. Don't short stocks because it's risky. It's a ridiculous comment. It's no riskier than going long. Yes, I know shorting things can go into infinity. Going long, they can only go to zero. It's a stupid comment. What are the thoughts about all the Wall Street bets in social media when it compares to financial shows? Paul, it's a whole different category. You're talking about actual traders who are making things move. You look at a chart. If a move starts, you play the chart based on what you know on technicals. That's a lot different than somebody standing on a TV show saying, well, gee, the GDP number just went up 0.1%. I think that means the economy is going to boom, and I think that means that stocks will go higher. And the next guy says, well, no, stocks are going lower. So that's real people making things move. But again, the point is, Paul, we don't care about any of that, because when we do what we're supposed to do, which is to look at a chart and read technical analysis, we see the result of whatever's happening. Isn't that beautiful? I don't care what Yaya says on TV. I don't care what the guest says on TV. I don't care what the short squeeze is. I don't care what GME is worth. You know what I care about? I find areas on a chart where I know people have to go long or people are going to sell, and I tag on with that. That's what we do as traders and investors. That's what you do long term as well. Long term, you want to make money? You don't care about fundamentals. It's ridiculous. You don't know fundamentals to make money unless you're like the guy who in that TV show Billions. If you have billions of dollars to invest researching stuff, then you can do that. You're not going to do it reading the internet. Remember when Kramer got in big trouble for telling people to buy stock? Oh, I didn't even know about that, Mike. I didn't know that was the truth. You know what I think is more criminal than that, though, Mike, to be honest with you? I really don't even care about that much, Mike. I assume everyone does that on TV. I assume they all do. I don't care. But you know what I think is more criminal than that? You know what I think he should have gone to jail for? Was when a woman called into him, and he recommended some stock at $30, right? And she called in, and she liked him. She was not complaining. She said, Jim, I bought the stock at 30. It's at 15. What should I do? Do you know what he said? Buys it at 30. It's at 15. Okay, first of all, that's ridiculous. No, worse than that, Mike. He said, you get in, you read those fundamentals, you kick the tires, and you buy some more. Yeah, he should go to jail for that. That's just ridiculous. That's what he said. It's a quote. Look it up. Kick the tires, buy some more. I don't remember the numbers, but the lady was getting killed in the stock. Yeah. Anyways, let's go on, because this next one here, I really want to look at it. So here is all you really good traders out there. This is one that I want you to focus on. And then Linda, I will try and take care of you in 5 minutes here if you're, well, everyone, not just you, if you're still hanging around. Here is the best inverse indicator out there. An inverse, when I wasn't inverse, well, it's an indicator. It means that when this thing peaks, the market will fall. And when this thing falls, the market will peak. Most of you know what those are. Most of you could probably name some for me. If you want to even guess what this one is, you may go ahead and take a guess at it. But I want you to watch this chart very carefully. Now, on the top, this is the QQQ. I'm using this to be the market. You can use the SPY. Doesn't really matter. The QQQ is the ETF for the NASDAQ 100. So we're looking at, quote unquote, the market on top up here. On the bottom is some mystery symbol. I'm not going to tell you just now what it is. But I want you to note this. Now watch this very, very carefully. And some of you are going to drop a jaw in 5 or 10 minutes here. You can make all your guesses. I'll tell you when I'm done what it is. Because we're actually going to look at 2 of these great inverse indicators. 2 of them. So I want you to look at this chart and look at this here. So here's number 1. When this indicator topped out, hang with me, Mike. When this indicator topped out right there, that was the bottom for the morning. This is a 15-minute chart, by the way. You can see this is the QQQ on top. It says so. 15-minute chart QQQ. This is a week or 2 ago, whatever it was. I just picked it out of nowhere. Amazing, isn't that? That topped out, the QQQ bottomed out. Like right, boom, there it is. Next one. We pull back and there again. This high here, when that topped out as a high, that set the low for the rest of the day. The rest of the day, folks. That topped out, set the low for the rest of it, right? Amazing. Then we go to the next day, right? This thing tops out again. When this thing hit that high, boom, that was the low of the day for the market, right? Here again, when this thing hit the line, boom. Every time this thing hit a top, the market hit a low perfectly. Look at it the other way also. Look at it the other way. When this indicator hit its low, the market topped out perfectly. This is like taking candy from a baby. Boom, boom. Boom, boom. Here it is again. Boom, boom. Boom, boom. Wow. Amazing. Let me go to the next one real quick, and then we'll talk about this. We're going to talk about it, don't worry. But let me go to the other one, because the other one is just as good. Here's the next one. You ready? Same thing, QQQ on top, and a mystery inverse indicator on the bottom. Boom. Indicator tops, market bottoms. Indicator tops, market bottoms. Indicator tops, market bottom. Indicator tops, market bottoms. What's today's theme? What's today's theme? I don't know. I think it has something to do with popular things that don't make you money. Hang on. You're going to like this, especially some of you good traders. Indicator tops, market bottoms. Top, bottom, top, bottom, top, bottom. Yeah, well, here's the thing. The reason I'm saying this is all the time I get people that come to me and say, this is great. But how does this help you is my point. How does this help you? Let me tell you what these are first of all. Does anybody know what the first one was? Nah, let me just tell you. Because this is what's going to blow you away a little bit. Here they both are again. The first one I showed you, the indicator, was the PSQ. All that is a mathematical inverse of the QQQ. So some of you are right. You were just looking at a complete inverse of the QQQ. Now, does that help us, anybody, to have a complete inverse of the QQQ up there? Does that help us in any way at all? Is there any benefit at all to having a chart up there? I mean, if we're trying to trade one chart, how does it help to find the short instead of the long? It doesn't matter, right? We just no clue. But the bottom one here is what might get some of you interested. The bottom is the VIX. Now, the reason I have this on, I have to tell you, maybe some of you don't do this, but I get so many times, I get people as a day trader saying, oh, the VIX just topped out, the market's going to bottom. You could anybody tell the difference between the VIX and this other chart? Look at this. In other words, the VIX is not giving you added information. It's just simply mirroring the market is what it does 99% of the time. The VXX is a derivative form of the VIX. It'll be the same chart when you're done. It is calculated differently. The only reason I put that on there is because this charting package doesn't get the VIX for whatever reason. I'm not subscribed to it. But if you look at the VXX, it'll be the VIX. It's the same thing. It's some derivative of it, but it shows the same inflection points. Okay. So here's what I want to get across, and some of you may not even comment on this because you may be kind of going, huh. First of all, let me say this so some of you don't have to type it. The VIX, first of all, is not a technical indicator. Okay, are you aware of that? The VIX is not a technical indicator. The VIX is new information. Matter of fact, let me just go to that slide real quick and we'll come back. The VIX is not a technical indicator. The VIX is new information, just like the VWAP is new information. It's not taking the past chart and extending it forward, it's getting new stuff on the screen. The tick, the trend, all the stuff is new information. And I don't hate it. The thing that it is though with the VIX is nobody knows how to use it. I use the VIX sometimes. It helped me find market tops and bottoms. But what nobody seems to get is the VIX is useful. When is the VIX useful? The only time it's useful. When it does what? And this is when most people throw it away because they think it's broken. When is the only time the VIX is useful? Nobody's typing. When it does not do the opposite of the market. When it does something different. The VIX is useful when the market starts dropping and the VIX should be inversely rallying and it doesn't. It just flatlines. That's when it's useful. That's the only time it's useful. Nobody uses it that way. And generally speaking, it's useless as a day trading tool. That's what I wanted to get to. A lot of stuff people keep on the screen is useless. Now, again, the VIX is a new piece of information. It's not going to help you day trade. What I just showed you, look at this chart. This does not help you, correct? When the market, well, this is the two inverses on there, but go back to here. When this is the VIX, when the market bottoms, this tops at the same time, the same exact time. Should we be using the VIX to trade the market, or should we use the market to trade the VIX? It doesn't help us whatsoever. Some of these things, the concept here for me is this. I used to keep the tick and the trend on the screen. As a matter of fact, does anybody go back long enough with me to remember my saying that if the NASDAQ trend and the semiconductor index both say the same thing, never fight it? Remember that, anybody? That goes back a long ways. And it was true. It's a good thing. I don't have against putting something like that up there. But here's the thing that I say. If it doesn't make you money, get it off the screen. That's a long time ago, Wave. I'm talking like 7, 8 years ago or something. If it doesn't make you money, get it off the screen. This is something I say all the time. If it doesn't make you money, get it off the screen. It may not be hurting you, but why keep it on there? Why keep it on there? That's possible, Wave. Why keep it on there if it is not making money? It simply will confuse you. It also gets into the other topic, which is confirming indicators, right? Everybody talks all the time about confirming indicators. Where are they? There's a whole separate presentation I did about confirming indicators. It's called Confirming What? It was at the end of last year. And it talks about this, that confirming indicators for the most part are simply an excuse for you to take a trade of some kind. What you need to look at is what matters and decide what you're going to make your decision on. Confirming indicators just cloud your judgment, get in the way for the most part. Again, I'm not against having a thing you want to look at to back you up, but having a whole list of confirming indicators doesn't matter. And usually it's going to have you entering too late. You have to learn how to read price action. So what do we actually do? And again, for those of you that are new, please keep in mind, I do these presentations every couple of weeks. If you go again to the free stuff page, is that here? If you go to the free stuff page, you will see, Linda, go to that free stuff page. You don't have to even be a member or do anything. You just have to go there. And there will be tons and tons of videos that give you great information. And I'm calling it simply the single best source of information anywhere on the internet about trading. It does not teach you the fine points of technical analysis, but it goes through all that you do need to do. So what is it that you need to do if all this stuff doesn't work? Well, what you need to do simply is this. You need to understand technical analysis in a superior way. Superior technical analysis is the first step. It's what you've heard me say time and time again. Everything is in the charts, the sum total of everything out there. When you work in, it's not that a lot of this stuff is wrong. If you think that I'm making fun of the GDP and making fun of fundamentals and all that, it's not that it's wrong, it's that it's built into the price to an unpredictable amount. And trying to listen to news or fundamentals will always have you on the wrong side of the trade. It's the way it's designed. So we read a chart, and then beyond reading a chart, this is the other prior event. And Linda, this would be a great one for you to watch also. It's called the three-legged stool is the name of the event, and it talks about what you see on the screen there. So three-legged stool was an event from on the free stuff page, and the other one is confirming what was another one that was on there. And what the three-legged stool is saying that superior technical analysis is what you need, but I know people with great technical analysis that can't make money because the other two legs of the school are psychology, understanding why you never do what you're supposed to do trading, and math and probabilities, which you may consider to be part of the chart, but I don't really. To me, it's what I call a moment in time type of trading style, where it's not about being right or wrong, it's about making money. And for most people, they do the reverse. They're not really trying to make money, they're trying to be right or wrong. Some of those concepts I just said may be a little fuzzy to you. Some of you, it may be um, like gold. It's like gold, Jerry, like gold. My indicator is moving average and candlesticks. Good, LG. That's exactly what I have, and that's what they should be. I don't like to call, well, candlesticks are not indicators by the definition because they're real-time information. And moving averages are technical indicators, but I don't use them for any magic. You'll never see me saying to, get long or get short when something crosses or whatever. The actual goal for me on moving averages is to have a better vision of trends and how trends work. Are there questions about tonight? If you were bored with tonight, I don't care, but I suggest you attend some other events as well. But to me, this is all part of the process of learning. And again, these events are not just, as you notice, these are not sales events. I haven't said anything to you about doing anything at DTS except go listen to free stuff. But they are required by my seminar students to listen to, because this is part of the process. To really appreciate and understand charts, how they work, and why this is the one and only one thing you should be looking at. Long-term, short-term, day trading, IRA, none of it matters, period. None of it matters. Charts is the sum total of everything. If you want more information on some of the other things on that checklist I just showed you, again, some of the other events, and specifically the Introduction to Mastering Technical Analysis. That event is not recorded. It's a class I do every 6 weeks, and you'll all be invited to that if you've not been invited in the past, okay? We have 3 minutes before our hour is up. Comments, questions? Wide open for questions. I can officially call this over if you want to leave, and I'll sit here and take questions all night if you want. What do you got? I see a lot of people typing. You can read this screen too for those of you who want to day trade. I always show this screen here. There is a way that you can day trade without the $25,000 SEC required amount. Legit, safe. I don't personally do it. I refer you to somebody that I've been using for years, 100% satisfaction. Just email me. Anything else, guys? Have a great evening, everybody.